Bitcoin pushed up another 5% in the last 24 hours, going up to that $60,000 range. In today's video, I'm going to be taking a look at the technical analysis on BTC, sharing my thoughts and opinions as to where I think that price action is heading next. As I get into today's video, if you do find it useful and informative, smash the like button. If you're new, subscribe, and let's take a look at what's going on here with Bitcoin. So this is Bitcoin paired up with USDT. We're on the 1 hour Binance chart, and you can see here a great push to the upside. We were initially finding the resistance at that kind of 58,388 and 58,588. We initially got rejected here. Okay, this was in line with our expectations yesterday. We were looking for support on the 50 EMA, 50 SMA, which we found yesterday, and then we kind of pushed through this range right here, pushing up to that range that we were talking about in yesterday's video, 59,350 to 59,809. This is a previous area of resistance, and we can see that this did kind of hold up as resistance very briefly, but we've been broke through it, and another great break to the upside. Now, at the moment, at the point of recording today's video, it doesn't seem to want to slow down just yet, and so we're talking about potentially pushing up now into these even higher ranges of resistance. Okay, so let's go ahead and take a look at this in a bit more detail. If we take a look at the stochastic RSIs, you can see here that the 1 hour is correcting down, showing that there is still more momentum at play here, essentially seeing that there's a small correction and basically not a huge appetite for selling at this stage. We are, of course, aware that the macros are not looking that great, so we want to be aware that everything that's going on right now is kind of being a precursor to what we expect to happen next week. But great growth nonetheless here as we kind of push up into this upper area. Now, the resistance that we are talking about is really 61,685 to 62,745. So that's going to be the interesting area. But before we get into that, we will potentially be looking to come back down and test out this previous area of support. So at the moment, we've kind of pulled back after hitting this high at 60,625. We pulled back by 0.75%. I expect that we're actually going to move back down just a little bit further by approximately 1.3%. It's not really worth shorting the market here. There isn't going to be a huge play in that, I don't think. Really, risk-reward ratio would come in at about 1.5, but you'd have to use high leverage to see some decent kind of returns. It's possible, of course. I personally wouldn't be looking to short the market here. Instead, I'm looking for that next big push to the upside, in my opinion. Okay, and now if we bring on smart money concepts onto this, we can see that there's a fair few fair value gaps, a bit of a mouthful, isn't it? But we do see that we're in a bullish structure on this 1 hour time frame. Okay, so that hasn't changed. We're still looking very good there. Equilibrium is sat down here at that lower range of 57,963 to 58,209. Okay, and of course, equilibrium is lower than the 50 EMA, 50 SMA, which is currently our support levels, along with the 200 EMA. So although there's a couple of fair value gaps here, ultimately, I don't think we're going to reclaim them just yet. We can still see that there's a weak high, so we still think that there's potential for a bit of a further run to the upside. But before we get into that, I do expect us to see a little bit of a cooling off, or just a little bit more of a pull to the downside potentially on the 1 hour time frame. Nothing major, like I say, potentially just coming back down and retesting that kind of $59,800 level, and then we'll be looking to test out that kind of $61,500. So for Bitcoin, it's running quite nicely at the moment. From an Elliott wave theory point of view, it's progressed quite nicely. There's still more progression to the upside, though I don't think it's going to fully reach that potential, but I'm going to show you what that looks like at the moment anyway. So the full potential would be up in this upper area at 62,742, but I'm expecting us to kind of just rally up into the $61,500 range to complete out our three-wave structure. So looking at it, it looks very good, but I still look at this within the kind of the wave three of the final movement. So it's not overly finished yet. It still shows more progression to the upside. So if we go ahead and reflect on what I'm talking about here, it's a 335 corrective pattern overall. It will be known as an ABC. So we'll go for an A, B, and C here just to kind of keep it nice and simple. And that C wave structure is looking to track a 5-wave movement. And we are still in the wave 3, in my opinion. I'm going to go ahead and remove this fib off and show you the 5-wave movement that I'm kind of tracking here. It's a very interesting structure, but I'm going to show you what that looks like just here. We pull this over. You can see here that when we get up into this upper range, we're going to hit into that range there, but I don't think it's going to be an impulsive 5-wave structure. I'm tracking this more as a kind of diagonal based pattern. Okay, it's more of a kind of contracting diagonal. Now wave 3, which is where we're currently sitting in, and I do think we are tracking this kind of structure, or wave 1, 2, 3, 4, and then 5. That can obviously cannot be the smallest wave, but tracking this, it's very, very interesting to see potential push up a little bit higher. Okay, so for the most part, Elliott wave theory is kind of tracking things quite nicely. We are looking for that next push up to the upside. I'd love to be wrong about 62,000, but I'm just looking for 61.5 to kind of meet those expectations that I have on this next move for the upside. This is a relief rally, of course, leading into what's going to be happening next week, which is going to be the Federal Reserve interest rate cuts. And historically, they've been very negative on the stock market. And obviously, the market is heavily driven from kind of psychology and sentiment of traders. And obviously, when we start seeing a little bit of a pull to the downside, some liquidity being extracted from the market, we are likely to see, a significant drop to the downside. That's not to say that there isn't a huge pocket of liquidity ready to kind of deploy, because there is. We've already seen a lot of billionaires pulling out of the market quite early on, and they are looking to come back in and probably buy up some of the cheaper assets. So there is going to be billions of dollars coming in, but I think we're also going to see billions of dollars flowing out in fear. So be very mindful. I still am targeting out that $40,000 to $44,000 low. Although this might hold up quite nicely now, because we have pushed up a little bit higher than the initial expectations. So if we can push up into 61.5K, it is going to give us a little bit of a buffer, but I do expect us to kind of come down to that minimum of $49,000 during that kind of knee-jerk reaction in the market when it comes to the Federal Reserve. If we roll this up into a daily time frame, that becomes a little bit easier to kind of see, because we are still targeting new all-time highs in 2025. We do think 2025 is going to be an absolutely bullish year, but I just expect more volatility before we get there. Okay, so money printing has kind of turned on. Money supply is kind of there waiting to go. Interest rate cuts are going to be kind of one of the final pieces of that puzzle, when that printer really starts to kind of turn up the gear quite a bit, and that's going to help ease in new liquidity to basically pump up the markets, essentially, as we see the US dollar devalue and all that kind of stuff. So for the most part, we are kind of tracking this move to the downside. It hasn't changed any of our structures. We need to kind of rally up higher than the 73,777 if we want to kind of break out of this. We are in lower highs and lower lows on the daily time frame. It's an overlapping structure, so it's not a trend. We've been through all of these things already, and this move to the upside is just going to set another daily lower high overall, and that's going to spook the market as well. Now, at the moment, we are, of course, getting those closed positions above the 50 EMA, 50 SMA, and the 200 EMA. We did that yesterday's close, so that's a strong position. The question is it a fake out, or is this actually going to be confirmed? We're going to be taking a very close look at today's daily candle, and if we can close this in a positive way, then we might actually have a little bit more confidence in the market. But I'm quite cautious as we kind of usher in towards the Federal Reserve's interest rate decisions, whether they do cut, which is a high probability. Then this could just be a big fake out, a bigger relief rally ahead of that big pull to the downside, which we are expecting to see over the next week or two. Now, it can be quick, of course, it doesn't have to be anything major, but we are targeting out this low down here at 40,295 to 43,800 approximately. But ultimately, I think 49,000 is going to be a really interesting point for Bitcoin to keep a close eye on. If we lose 49K, then we should expect us to pull back more towards 45, and obviously that's going to be right in line with our expectations down here as well. In terms of our structure on a bigger bullish macro, 2025 is looking very strong for Bitcoin and for the crypto market. I am looking at targeting out a conservative 101,000 to 118,000, but I wouldn't be surprised if we actually push more towards 130 to 135,000 for Bitcoin as we kind of finish off the bull market of 2025. Now, historically speaking, the bull market ends towards the end of the year, kind of November, December of the year after the US elections. We've been through that already in a number of times, but it's possible that things that are vastly different this time around could basically make it a little bit shorter. So we'll be keeping a close eye on March of 2025 to see where the price actions are heading, etc. But for the most part, Bitcoin's kind of behaving as we've kind of been expecting now. It's pushing a little bit more aggressively, but nothing too much to kind of say that we are in a complete breakout situation for BTC. The daily 200 EMA is a very interesting one, but it's not the first time that we've rallied above these areas, only to come tumbling back down once again. So we'll keep a close eye on it, but for the most part, it's kind of behaving as expected. Now, what are your thoughts on all of this? Let me know in the comments down below, or join us in our free Discord server linked in the description. We'd love to hear from you. And if you haven't done so already, guys, check this video out right here. It's not one you're going to want to miss.